Hi, I'm Michael Evans and I'm a qualified accountant. I've worked in many industries, including real estate, construction, marketing, and now a full-time finance broker. I'm going to tell you a little bit about self-managed super funds today. The background of them. What is a self-managed super fund? Put really simply, it's a way of saving for retirement. You are in charge, you make the investment decisions, and you make sure the compliance is within the rules. One of the big things is the sole purpose of a self-managed super funds is provide retirement benefits for members. And obviously there's pros and cons. Let's start with the cons. There's only a couple, but let's start with them. There is a lot of compliance. There are a lot of rules. And then there's also the running costs. And that's why standard is that you need a minimum of like $250,000 balance in the fund, because otherwise the running costs are going to chew it away too much and you'll need a bigger return on a small amount of money to even break even. So that is why they sort of come up with that arbitrary figure, but it does sort of make some sense. The benefits, and this is the big one. It is a tax concessionary environment. So the most you'll pay in there during accumulation phase, which is a topic for another day, and a pension phase. But accumulation phase, you pay only 15% tax. So your money you put in, your SGC contributions, 15%, your earnings, 15%. Accumulation phase, which is when you get old and ready to retire. But as I say, pension phase, it is 0% tax. Also, asset protection. Now, not a lot of people don't think about this with a self-managed super fund, but it is a separate legal entity. So the assets are not yours. They are in another entity. So asset protection also plays a part in this.
Sure.
Very topical. Does have low capital gains tax rates as well. This could change next week, but at the present moment, you're looking at 10% on capital gains tax in the accumulation phase and 0 again in pension phase. What sort of property can you put into a self-managed super fund? Resi and commercial are both allowed, but they have very, very different rules. With a residential property, cannot be purchased from a member or relative or related party, I think the term is very wide-ranging. Also, they cannot rent from the super fund. So you can't go buying your holiday house in your super fund, in a nutshell. Also, it is therefore just a straight investment property. Nothing more, very simple as that. Commercial property, I love this, especially the self-employed people. If you're self-employed and you've got an office or a factory or whatever it may be, retail shop, why are you paying someone else's mortgage off? Why wouldn't you put a property that you can trade out of into your SMSF and you pay them rent and you are the one who get the capital gains tax? And as I mentioned before, it is tax concessionally in the self-managed super fund. That also, you can buy from a member or a relative if it's a commercial property and sell it to the super fund. And obviously, as I touched on before, your business can rent that commercial property to run their business from. So that is where I love commercial property in an SMSF, and especially for self-employed people. Okay, the costs. There's setup costs, there's running costs. Setup costs, you need 3 to 5K as a general rule, will depend a little bit. Running costs, you need an auditor and an accountant. The accountant prepares the tax return financials and the auditor audits them. Again, for both of them, it's about 3 to 5K. Depends on how many investments you've got, how complex it is. If it's simple, it could be less. If you've got 45 million shares, for example, and I'm exaggerating, it could be a lot more complex, and therefore a auditor fees could be higher. The team, you need a team to set it up. Again, hello, an accountant. You'll need an auditor. You will also have a lawyer, and they will put the deed together for you. Maybe a financial planner who will help with the investment structures or strategy, I should say, as well as could help you with insurance. You can put life insurance and income protection insurance through a super fund and claim it that way. Now, okay, another topic for another day. Also, if you're looking to put property in, you may want to use a buyer's advocate, and of course, you need me, a finance broker. If you'd like to discuss any more of this, please feel free to reach out on me, either call me or text me, 0418 327 025, 0418 327 025. Thanks for your time.